Hi, it's Adam Hewison. I'm coming to you from the digital studios of Market Club, and it's good to be back. I was down in New Zealand and Australia for my daughter's wedding, and it's good to see the markets and sort of get my market legs back again. And I was looking at the gold market, and I wanted to share this with you. This chart we're seeing right now is for spot gold. We've looked at these charts many, many times before, so you should be familiar with them. And the symbol for spot gold on Market Club is right here. XAUUSDO. That's spot gold. Now, spot gold trades pretty much every day with the exception of Saturday, Eastern Standard Time. Saturday it trades in Hong Kong, but pretty much any time of the day you can go on to Market Club and get a quote on spot gold. So what we're looking at is a monthly chart right here. And we're going all the way back to 2002. Sort of gives you a big picture of the big trend up in gold and how it's been moving. But what occurred to me, say in an earlier video in September 21st about the cycles, and these were shorter term cycles. Today I want to talk to you about the super cycle I see in gold. And it's pretty simple, and I want to share that with you. Now, if you just visually look at this market, you see a couple of things. One right here, and one right here. Now, if you tie these together, they're very close to being the right number of months apart. So every so many months, you could see, boom, we make a high, another high, and we can project that in the future, we're going to make another high. Now, remember, we're doing this on a monthly chart. So I'm counting from this month here, which is back in April, and through to this month here, which is, again, is 23 months, okay? Now, if you were to project this forward, this came in at 22 months. And then from this point on, we're going to be looking at another 22 months before we see, 22 months before we see another high in gold, major high, that's going to exceed this high. So what's going to happen to gold right now? Well, my feeling is it's going to be very similar to this period here and here, where the gold sort of comes down off its highs and sort of drifts around, like here. Now, from the high to the low point, and I'm counting this as the low point, was, let's just count the 1, 2, 3, 4, 5, 6 months, okay? And from this point to this point is 1, 2, 3, 4, 5, 6, 7, 8 months. So we can assume that if this pattern holds true, gold should basically move sideways to lower for the next 6 to 8 months. Does everybody get that? So we make the highs, the market goes sideways, consolidates, builds the energy fields we've talked about before, and then moves higher. Again, here was very simple. The market made a high, came down, built the energy field up, boom, higher. I think we're going to see a similar pattern, and we're going to see this market somewhere along the line, probably in the, I would say, the June, July period would be the ideal cyclic period to be looking to buy gold. Now, this could come in earlier, meaning May, or it can come in later, meaning August. With cycles, they tend to contract and expand, and there's also cycles within cycles. Let me give you a good example of that. I'm just going to draw this out. So let's say the cycle is up, then down, up, and down. That's the big cycle. Well, you could also have smaller cycles like this. So what you try to look at with cycles is try to get them all when they're making a trough and then get long. Same with we were predicting that gold was going to make a high in late December. It actually came in about 20 days earlier, and that was on a shorter term cycle, but it basically said that the cycle here, we were looking at 23, it came in a month earlier. So you have to be aware of that the cycles contract and expand, and that's what we do using our trade triangles. Now again, the market looks as though it's in an uptrend. It certainly is in an uptrend, but we're looking for this market to consolidate before it resumes its upward journey. And maybe it's going to correspond with interest rates going up in the States, inflation rearing its ugly head again, or its head again, which I think is inevitable given the amount of money that we pumped into the system. I strongly recommend that you watch my 9/21 video. We have a link just in the copy below, and you can see that, and you can see some of the shorter term cycles that we actually predicted. So this is Adam Hewison. Hey, thanks for watching. Look at this. This is the gold super cycle, and we're predicting that we're going to see a high in gold some 22 months from December. So you're looking way ahead into 2011 at this point in time for a really big move. So Adam Hewison, watch the cycles, look for a low to come in about 6 to 8 months from now, and I think that's the time to start to get looking to get long gold for the big push up into new high ground. Thanks for watching. It's good to be back. I hope you enjoyed this video, and we'll have more coming just like this. Take care.